This is on collaborative AI, transforming customer relationship in BFSI. Basically the role of AI in building customer trust. And for this fireside chat, I'd like to call on stage Sonali Jindal, co-founder and COO of Ring and Kissht. We most of the BFSI fraternity are aware of the brands. So can we have Sonali? Primarily, what we would like to focus is how, when we are talking about collaborative AI and how the fintechs are operating, and in terms of increasing digitization happening. So what are the issues being faced there, how the deployment is happening and the challenges thereof. So maybe before we start to give a context, very briefly, if you can mention what Ring does in terms of the solutions, very briefly, and then we can take it up from there.
Yeah, guys, I think it is a banking conclave, and a lot of people might not have heard about Kissht. We are a 8-year-old franchise. What we've done over the last 8 years is basically built a very robust digital lending platform. So we are a technology company at the top and an NBFC at the bottom. But obviously for us, collaboration is very, very important, because a player of our size and scale would never be able to get access to the capital base that large banks and NBFCs have. So in terms of, I was hearing a lot of conversations where people were mentioning that they want to run a lot of Gen AI initiatives, but data is a big problem. For us, when we started in 2016, I left HDFC Bank and met the other 3 founders. One of the big things for us was that we wanted to explore that, is there a way to do a fully digital loan? Is there an architecture or an infrastructure that you can create where every aspect of customer, right from onboarding to customer support to collections, can be fully digital? So for us, the ethos on which the organization was established was a very strong ethos of having data, analytics, and technology in place. So we are a 600-member organization today. Out of 600 people, there are 300 odd people who are focusing on technology and analytics. So right from the customer starting the journey to the customer entering the collections bucket, or the customer starting to do, or we starting to do a process of legal repossession, everything happens digitally. So we run with truckloads of data in terms of customer. So we've acquired 10 million customers. We've given out loans to 10 million customers. And every interaction of that customer, which truly is called as the 360-degree view of the customer, is what we capture. So one of the big things that we've been able to do over the last 8 years, and that is something that I feel truly proud about, is the fact that there is no manual underwriting. Everything about the customer is fully digital. So I really think that what we've built is an enterprise that is built on data, an enterprise which is built on analytics and technology, having a lot of elements of customer centricity. So that is the enterprise that one has built.
Okay, thanks. So let's talk about this digital lending market, which is emerging, and there is a general misconception also, because primarily we know a lot of security issues around these dubious Chinese kind of apps, and especially after the pandemic that had happened. But if we look at if I may say, the legal, proper digital lending market, can you briefly explain what are the contours of that market in India?
I think one of the big things, or the contours of the digital lending market, are as follows. See, there were a lot of issues that happened around Chinese apps. There were a lot of issues which happened around people trying to say that you are giving loans to the same customer, the customer identity not being established. I would say these were the initial hiccups. So what has happened from 2016 till now, right, which has been 8 odd years, the entire digital infrastructure in the country has got very, very strong. So all the pillars, whether it is in form of the KYC of the customer, or it is in form of the data that gets captured on the customer's device, the bank accounts being linked to a mobile number. So all of that has truly played a role in identifying what is the customer, right? So one of the big challenges that banks used to face, and now they don't face it anymore, is about identifying or establishing the digital identity of the customer. So just to say, what are the strong pillars on which digital lending is based? I think one strong pillar is the ability to identify and put an identity to the customer. The second important pillar is the fact that when we started in 2016, right, people had a lot of questions about what kind of customers are you going after? Are you going after NTC or you're going after bureau-based customers, right? Now, if you see any bureau data, when I left HDFC Bank in 2016, the count of consumers on the bureau was 80 million. That same number has become 260 million. So basically, which also kind of elucidates that there has been true penetration which has happened in the Indian market. So the ability to acquire customers and ability to kind of run unit economics positive business is what all the digital lenders have been able to establish. I think the third thing that the digital lending is truly based on is compliance. If you spoke to us 2 years back or 3 years back when RBI was not so active, we would have said that we are only thinking about business growth and we don't understand compliance very well. But today, we think about compliance first and business later. So that has been like a very big shift that has happened in the way we are operating or we are running our business. So compliance is becoming the third important pillar. I think the fourth and fifth are very, very important. The fourth one is that the entire bit on data analytics, though data analytics is an abused term, right? Everybody uses that term, but we truly demonstrate data analytics in all the spheres of how we do business. So when the customer downloads the Kissht app to the time the customer gets the loan, and the time when the first call to the customer is made for collections, the entire process is digital. Every single touch point with the customer is captured in form of trails. So as much as in 2016, people used to talk about structured and unstructured data, for us, we've created databases or data lakes which capture all the interfaces with the customer, which basically means both the structured and unstructured data gets captured in a manner that we can run tons and tons of analytics. So I think that is the fourth important pillar. The fifth important pillar is, see, people talk about technology implementation also in parts, right? Some people say that we've implemented a great LOS. Somebody would say that we've implemented a great LMS. But we truly have implemented a full stack solution. So right from lead gen to LOS to LMS, debt collections, whether it is legal, repossession, or whether it is field, whether it is calling, everything gets captured in the system. So it is an end-to-end technology layer that one has built over the last 8 years, which helps us track all the customer endpoints. So these are the 5 important pillars of digital lending that we've been able to build. And when I look at other players who are operating with us, I think people have demonstrated the same level of excellence. So I would say that digital lending truly has come out of this POC or a box sort of a stage and truly has been tested over a period of time, and we've demonstrated all the important pillars of business, basis which we are ready for scale up.
As in fact, one of the 5 pillars that you mentioned, you touched upon the compliance part. That was one you sort of preempted that would one of my later questions. Okay, so we talked about, we had the one panel discussion in the morning, and there was a consensus. There were panelists from banks. 2-3 things. One, collaboration between banks and fintechs. That is a given now, and that has to be strengthened further. We further talked about the KYC, the customer profiling happening. So more and more technology being leveraged in the customer profiling exercise. And so keeping this in mind, this collaboration between banks and fintechs and the need for more effective customer profiling. And the third thing, very interesting point one panelist mentioned was, it was not things that banks were able to do, which they were not able to do, that gave rise to the fintechs, which fintechs being much more agile and faster were able to do things which banks could not do. So keeping these 3 things in mind, one, the advantages of fintechs, especially in the digital lending space, and in terms of customer profiling, what sort of technology leverage and how do you collaborate with banks also, if you can highlight?
See, the way I think about it is that the definition of success, right? is being able to control your customer or have a very, very strong relationship with your customer. Now, when one of the big questions around fintech was that is fintech going after a segment that banks are not going after? Or fintechs, because of their agility and better processes, are able to acquire the same customers but at a faster speed. So I really think that what has happened with us is that we truly are able to go after the same risk profiles that banks would go after, but this agility in process or the stickiness that we are able to create with the customer because the approval rates are somewhere communicated to the customer through the app itself, the processes are much more seamless, that has led to stickiness. So one of the beliefs that existed in lending was that lending is not a sticky product, right? Unlike savings or unlike investments, where once you decide that you are with, say, Axis Bank, you will always be with Axis Bank. Lending was never a very, very sticky relationship. For us, what we've seen is that the relationship is very sticky because you are able to deliver experience. So again, going back to the point that I was making, right, that having this element of customer centricity, having this element of being able to deliver experience through a better quality product is something that fintechs have been able to demonstrate. And that is the reason one is talking truly about a franchise which is built on having 10 million customers. But when it comes to points like collaboration, I strongly believe that the next 10 years would truly be about collaboration because for fintechs, right, we are a 3,200 crore AUM company. For us, if we have to go from 3,200 crores, say, to 20,000 crores, there is only so much leverage that we can have on our own books. So that is where relationships like co-lending, relationships like giving out other products on back of the customer base that we have, those relationships would become very critical. So I would strongly believe that the way fintechs would evolve or the next 10 years would evolve would be about we holding a large pool of customers, we holding the entire experience bit because that is what we understand well, but banks and large financial institutions being the capital providers and also the collaborative partners where we are innovating products with them. So that is how I think the next 10 years would be. And also in terms of, the worries that banks had, right? One of the biggest worry was that whether the KYC is done accurately or not, whether the customer is a genuine customer or not, whether the underwriting standards are met or not. I think we've had data for so many cohorts or pools of customers that we can truly demonstrate that there is a customer segmentation that exists where there are customers who are at risk score of, say, or a risk percentage of less than 2%. There are customers that are between 2 to 5%. There are customers who are greater than 5% risk. And it is up to the banks to choose that what are the customers that they truly feel comfortable about. So this entire bit on collaboration where banks act as a capital provider, also as institutions where we can innovate new products with them, I strongly feel that there is a big, big opportunity, and that is how I envisage the next 10 years.
So you touched upon some of the future roadmap. I'll need a brief, I'll say a little deeper, digging a little bit deeper into that. India is a vast country, very heterogeneous population. Socio-economic profiling is different, and different types of customers require different types of loans, and everyone needs it fast. And also the country geographically there are the tier 2, tier 3 places. So where do you see the future of digital lending for all those segments of customers and in all those different kind of geographies?
Yeah, I think a very, very important question. See, again, a myth which has been busted, and I also ran with these idiosyncrasies way back in time. See, one of the things that has happened is, and as a digital lending player, I'm talking about it, there are 260 million customers on the bureau, 500 million users who are using UPI, around 700 million users who have bank accounts. When you look at, say, urban India versus rural India, right? One of the things which is common is everybody is using a smartphone. So there are people who are on feature phones, but if you look at Indian households that are earning and they are above a particular income segment, at least one member in their family would have a smartphone. So the common thread which is binding the country is twofold. One is usage of smartphone by at least one member in the family, and the second is usage of UPI by at least one member in the family. And that in itself binds the urban India with rural India. Obviously, there are things about whether the KYC is available digitally or not, but I think the way Aadhaar has got penetrated, this commonality of having the digital record of the customer has become so deep that it allows for any player to penetrate. So that is the commonality. So digital is the true commonality which exists across the country. I was recently talking to a customer from Meghalaya, and that customer had his mother, his father, his son, his daughter, everybody was linked to an e-Aadhaar. All the 4 people in the family had access to a smartphone. All the 4 people in the family, in one way or the other, had access to UPI. So digital is the common thread. What is not common is whether they have income which can be assessed digitally. And I think income assessment is one area where one will have to kind of get to innovative methods. Our account aggregator penetration is as low as 5%. So as much as we think that account aggregator is very high, everything should move to account aggregator. The penetration of account aggregator is very low because people on net banking are low in tier 3, tier 4 centers. But the access to mobile is very high. So till the time you can have alternative methods where you assess customers' income using his device, I think those alternative methods can help you achieve higher penetration. So one of the things that we do is we start with smaller ticket size loans. We start with loans where the average ticket size is around 70 to 80,000, and then gradually upgrade that customer from a 70-80,000 rupee loan to a 5 lakh rupee loan against property. So to a particular segment of customers, right? If you're able to segment the customer better, basis either his socioeconomic profile or his digital profile, I think that will make a big difference. And for the customers where there is lack of clarity in terms of his socioeconomic profile, start with smaller ticket sizes and then gradually migrate the customer. So the philosophy that microfinance institutions had, right, for the longest of time, that is the philosophy that also applies to digital lending. The other thing that we've learned, I think slightly a harder way, that risk-based pricing is what you can truly implement. There can be a class of customers where your risks can be higher, but you can kind of augment that with slightly higher pricing. So there is no necessity to have a very narrow range of pricing between, say, 8% to 15%. You can operate in a much wider spectrum of pricing, which is, say, 8% to 35% also, by just grading the customers better. So I strongly feel that if there is a very segmented approach towards offering, you can cover both the customers in tier 1 centers as well as the customers in rural areas.
Thanks, Sonali. It was great to know the future of digital lending and get a picture of some of the dynamics in the Indian market. With that, we conclude this fireside chat, and I would request to felicitate Sonali for her role in deploying more and more technology in banks and also in this digital lending space, pioneering this role. And to felicitate her, Dr. Anuradha Bhatia, Head of Technology Standard Chartered, to please hand over the award to Sonali.